British pound got a big boost today after GDP figures surprised to the upside rather than the downside. Right now, there's a lot of concern in the UK. The Bank of England recently slashed its growth forecast in half from 1.75% to 0.5%, and some projections even suggested that the UK could fall into a recession this winter. Meanwhile, the Labour government and Chancellor Rachel Reeves are facing intense scrutiny over their policies. While they argue that the UK GDP will continue to grow, their approach by raising taxes and cutting public spending is typically seen as contractionary. But today's GDP report brought some kind of relief. The monthly GDP figure was expected to come in at 0.1%, but it smashed expectations, coming in at 0.4% instead. That is a huge win for the Labour government and could be a bit of an embarrassing moment for the Bank of England, especially Governor Bailey, who painted a much gloomier picture for the UK. The pound-US dollar pair initially spiked, briefly breaking above the 1.25 handle, but then struggled to hold onto those gains. Looking ahead, if GDP continues to beat expectations, then traders may hesitate to sell the pound. But if growth starts to slip, expect sellers to jump in and short the pound. From the US side, core CPI rose from 0.2% to 0.4%, which could put the Fed's rate cutting plans on pause for now, keeping interest rates higher for longer. If US bond yields continue to rally like we have been seeing, then the US dollar usually follows, meaning further downside potential for the pound US dollar is still on the table. All right, let's jump to the charts and let's take a closer look at the chart. Okay, taking a look at the pound US dollar chart, we are at that critical level, that 125 handle, which was this previous area of support by price as well as resistance. If I go to the daily chart, we can see that price has been trying to break this level now over the past couple of weeks or so, and now we're back at that point. So we're at a point where we could see price start to reject in here. More importantly, what happens if we see price break this? Well, I think then that the market is really kind of telling us that it wants to sell US dollars, it wants to buy British pounds at that point if we were to see a break above that, likely leading to a move then up towards this sort of 128 level just in here, which were these highs that formed back in December. Do I see this happening? Potentially, but potentially not. If we look at the dollar index, yes, starting to go a little bit more bearish now. If we do kind of breach this also trend line, this counter trend line here, breach that 50-day moving average, yes, we could see a move down, which could give a little bit of a boost towards the likes of the pound US dollar and the euro US dollar, of course. Euro as well, following a very similar path. We know pound and euro highly correlated, and we're seeing that nice little push up here on euro. One market that I want us to keep our eyes on, though, are those US 10-year yields. Market started to breach back higher once again. If I just remove that trend line and just apply this one here, you can see that we're breaking now into new highs when it comes to the US 10-year yields. Now, when the 10-year rallies, we usually see the US dollar follow as well. We're not seeing that right now. What we can do actually is just compare the two charts together. So if I just go and grab the US dollar index, or you can grab euro US dollar, pretty much the same thing. But if you just add DXY to compare, and I'm just going to put that onto a new price scale there, you can see that they are highly correlated. When the US dollar government 10-year yields rally, then we often see the US dollar index follow. We're not seeing that just yet. There's a little bit of a sort of disassociation going on here right now. So I do feel like if we were to see US 10-year yields continue to rise, then I think that we are going to see a little bit more upside in the US dollar. So this is just one to keep your eye on right now. Keep an eye on this chart here, because if we do see that strength coming through, then it could obviously impact those major currency pairs, just like what we talked about on pound US dollar as it approaches that 125 handle. So keep your eye on that one. I hope you enjoyed this video. If you did, please leave it a thumbs up. Subscribe if you are new to the channel. Remember that this isn't trading advice, and trading on margin is high risk.